Good morning, everybody. The 29th of May, and welcome to this week's Weekly Wrap. And on the screen, I have Mirka Kagura and Anthony Flapper, and hopefully the gremlins, the tech gremlins have disappeared. Anthony, are you with us today?
Yes, I am back with sound. As much as probably people enjoyed it last week, not hearing me.
Mate, I thought it was entertaining that you sitting there trying to chat, mouth moving and no sound. Mick and I loved it. We thought it was great. Wasn't that right, Mick?
Listen, watching him do this, go, can't hear you. Very funny. Well,
Uh,
that's we're used to this. Ever since COVID and Zoom calls, Teams calls, it's been game on, and you just don't know what you're going to get for the first 5 minutes. That's for sure.
Absolutely, mate. Absolutely. Well, look, markets have been busy. Canberra's been out of control. The parliamentarians are back. The Middle East remains completely unpredictable as always. And if you own property, I guess there's a lot to unpack. But before we do that, okay, how about a quick update on the markets?
Yeah, quick update. Not a lot of guidance coming through from the US this week because Monday was a public holiday, Memorial Day in the US. So we've only had a few days worth of trading, but nonetheless, it's actually been in the green, which is good over in the US. So the S&P 500 is up about 1.2% for the week, and Nasdaq up 2.17. And in Australia, unfortunately, we're down 0.64. I reckon we might turn that around today and hopefully end up in the green for the week. Just looking at the SPY for which sort of predicts what the market's going to do for the opening and for the day, I'd say we might end up in just a touch in the green, which would be nice. What happened in Australia? We sort of were buoyed by the inflation rate coming down this week. It was down to 4.2% off the back of a 4.6. I think the halving of the fuel excise sort of may have helped us a little bit there on the inflation rate. All of a sudden, the talk has become, does the expectations for further rate rises cool a little bit, and sort of market like the sound of that. So I think that markets are now sort of saying maybe we won't get, two or three rate rises. Maybe we don't get any rate rises going forward. And I think, just having some good discussions just by chance this week, I met with a couple of portfolio managers that invested in Australian equities and had the opportunity to talk to them about the Aussie market, and even off the back of a decent reporting season in February, they all sort of flagged some of their concerns around the economy and depending on what sector that you're invested in. So I think that we're starting to see snippets of that. And as we know, rate rises take a while to sort of filter through the economy. We're starting to see the impacts of those. And then yesterday so the market went up after the inflation figure, and then yesterday we took a bit of a belting because um, Sir Donald Trump, I'll call him Sir, because he somehow managed to take the trading day in the US to, yeah, we're very, very close to a ceasefire to. Actually, we've just bombed some key sites in Iran, and our market went, "What on earth is going on?" As it should. And then I read the news this morning, and no, it's all good. We're again on the precipice, guys, of signing a peace deal. So US markets responded accordingly. So he stitched us up because he bombed some people when the market was closed in the US, but ours was open, and then he reversed that and turned that story into a positive one. So let's just see what happens. But all in all, the fun and games in the markets continue, guys, and that's it's not going to slow down anytime soon.
Just a quick question there, mate. He wouldn't be trading our market, would he?
I wish I was front running the market off the back of this, and now that you've asked me that question, I'm going to run a little side stat now and see what happens post US close and open, and how that affects our market.
Yeah, look, I think, and thanks for the update there, mate. I think what is clear from the client's perspective, because clients are asking the question, going, how do you navigate this sort of stuff? And I think one of the key messages that we keep on presenting is, let's avoid reacting to the headlines. The headlines are, they're all over the place. So trying to remain sane in this whole process is impossible. I think the key with all this stuff is to remain, diversified and do that really well. and really focus on what is the long-term objective. So, you know, we can make a lot of movements in the short term, do a lot of stupid things in the short term, and really to no avail. And if anything, probably at a loss for many circumstances. So sometimes just holding on and just going, okay, we've got a good strategy in place, stress testing it, knowing that it works, and leaving it alone is usually the best course of action. Now, Anthony, parliamentarians came back to Canberra this week, and there was a bump in their step there. You know, Jeff Chalmers was walking around chest out. Alba had a new hairstyle. Things were looking good. And tax reform, they actually introduced it into Parliament, I believe, yesterday from that point of view. So it's now currently before the House. You want to give us a quick overview in terms of, was there any backtracking, or did the government just ram through what they said they would do?
Yeah, thanks, Luke. No, effectively, everything went through yesterday under one piece of tax reform. So it included the negative gearing changes, it included the capital gains tax and the minimum tax on gains, the trust distribution arrangements, and also the upside, and which the one thing that's effectively will come into play earlier than the others is the worker tax offset and the $1,000 tax deduction. So those two items effectively take place 1 July 2026, they start. Everything else is effectively 1 July 27 or later. So, but effectively the key things being the negative gearing, capital gains tax and trust distributions is effectively all grandfathered. So there's nothing up until budget night that's going to be effectively impacted, particularly from a capital gains tax perspective. So that's the benefit. Now, how we see that pass through Parliament, we'll wait and see, and whether there's any adjustments or changes to it. But yeah, there has been, I know the industry bodies, Tax Institute, CPA, CAs are circling around this and are not very happy.
It's interesting that they put everything into the one bill, Anthony, because I guess what you're trying to do is gazumpt or wedge your opposition, because if the opposition says no to this, effectively they're denying Australians a tax cut, i.e. the $250 and effectively the $1,000 in theory. So they're denying them that. But if they actually say yes to the tax cuts, then that means they're essentially having to accept all the other measures. So very, very well played by the Labor Party if we go from a political perspective. Forget about the economics, but the political side.
Yeah, and I recall several years ago there was something similar where there was 2 or 3 different things, and I think one thing got shot down, and effectively they had to reintroduce that, rewrite the 3 bills separately, and effectively put the 3 of them before Parliament, of which 2 ended up getting through and 1 didn't. So, yeah, there is some history on this, but it'll be interesting to see. I don't think this is over yet. There's too much media about this. There's too much from the industry body perspective, and the impact that this is going to have on small business innovation and entrepreneurship is too big.
Yeah. Look, Mirko, I guess from your point of view, thinking about this, in terms of what the government is doing, do you think it's actually clever trying to put everything into the one bill and then ramming it through, or would you prefer to see it split and addressed properly with consultation and with input from broader society?
Yeah, my preference in truth would have been that they worked through this properly in advance, worked out what the impact would be, and then rammed it through, as opposed to now having to perhaps do some backtracking, do some ramming, do some unramming, and and try and sell this to the people. It's typical of government policy. Now we've got a whole raft of issues that we're trying to consider, and I think, guys, the message to the clients has been right, because we have fielded quite a few questions around this in terms of how does this affect me, what do I need to do. There's probably not a lot that needs to be done, like that it would all of a sudden increase the decision-making process and whatnot. And actually what we've seen in some sectors of the market has been a bit of a reactionary, objective to what they're doing, and it's actually not the best way to go. It's a bit like your equity portfolio and your investments. You cannot afford to sort of shoot from the hip and actually react to markets and noise.
Yeah. And look, one thing that I think is really important for our clients to appreciate is the fact that all this stuff is being grandfathered. So from a capital gains perspective, all the capital gains before the 1st of July 2027 fall under the old rules. So you will that doesn't change. So that capital gain that you've incurred up until that date is entirely under the old rules. I guess the question that's playing in the back of my mind is how are the valuations done? Because, if we're using an apportionment rule, then that kind of dilutes it to a certain degree. So there's an issue there that we need to work through, I guess. Beyond that data on a capital gains perspective, yes, it goes under the new indexing method. But more importantly, the sting in the tail, there's a minimum capital gain of 30%. Now, that doesn't apply to people who are in receipt of a government support payment, such as JobSeeker or the age pension. So it doesn't apply to those people. But that 30% is pretty cruel, I reckon. And I think that's kind of gone through and a lot of people have kind of ignored it. And I think that's a major issue, that one. The negative gearing side, again, anyone who's negative gearing today and was negative gearing before the budget, no change. You're fine. Nothing to see here. It's really around if you're doing something after budget night or if you're doing something after the 1st of July 2027 again. So whilst the government talks about intergenerational planning, it talks about trying to make housing more affordable and all this kind of stuff, what they have done is they've said to the people who've had the benefit of all these things, you're okay, you're fine, you can keep on doing what you're doing. But to a whole new cohort of individuals, they're saying, actually, these rules don't apply to you. So it's actually going to restrict their ability to grow. So, Anthony, your point on entrepreneurship, your point on innovation, your point on wanting to get ahead is valid, I would argue. Now, interestingly, since we're talking about that, this week Westpac came out with some property data. And what they're forecasting is something pretty interesting. They're actually saying that housing turnover could fall by 20 or by as much as 20%. They're saying investor demand could fall by as much as 34%. And what they're saying is that there's going to be fewer transactions in the property market rather than a crash. So they're not forecasting a property correction per se. But I guess from that point of view is if investor demand falls by 34%, if turnover falls by 20%, we all know how supply and demand works. The economics are basic on this sort of stuff. If from that point of view demand is falling, then surely to God, that means price is falling. Anthony?
Demand is falling, price should be increasing, wouldn't it?
Oh, sorry. Well, no, actually, no. If demand is falling, price is decreasing.
Yes.
Yeah. Sorry, yeah, that's right. So if we think about the logics of this, if all of a sudden there's less people in the market wanting to buy a property, then surely that means prices are coming down.
Correct. Yeah.
Now, given that Australians have an affinity with property and given a lot of us feel wealthier because of the balance sheet of our property that it provides, the impetus that it provides, does that mean every Australian is going to go backwards? Just a question.
I think I think some of the data that's been coming out in terms of the house pricing decreases. I think most people, based on this legislation that's proposed and where the property market's heading, probably consider that housing prices could be reducing by up to 10%. Now, that'll have certain areas and certain pockets that potentially could be impacted. But the way I look at it then is, yeah, everyone wants to be a homeowner, and that's the idea of what they're trying to do. But there's a massive market there too for investors. Now, that's where I see that there's going to continue to be challenges, because people will not want to be in or the appeal to negative gear is disappearing. So stock that is ideally for investors is not going to be available. And the other thing too is that if prices are coming down, what's that going to do with rents? Rents are either generally will come off as well. Now, if we're trying to push more people into home ownership, then rent yields on residential property now are what I consider low. So
Absolutely.
If you've got minimal capital appreciation and your rents are low, what's the appeal at all for residential property? It just you've taken away negative gearing. It makes no sense.
There was some interesting data that came out, Mirko, during the week from our sister state in New Zealand, across the ditch, as we like to call it, and they are going through a rip-roaring time of a property correction of sorts of 20% plus and 30% plus valuations. Is that plausible here in Australia, do you think?
Well, I don't want to alarm people, right? But we do have a bit of a blueprint as to what actually happened. So in 2021, forgive me if it was 22, I believe it was 21. New Zealand actually banned negative gearing of in the property sector, and what happened beyond that was quite a substantial property market correction. It was to the tune of 17% that the property market came off. Now, yes, that was during a period of pretty high inflation. If you actually took into account the inflationary effect on that, the actual rate of decline was 30% in the property market. They've actually since in 2025 reversed that decision and allowed negative gearing to occur again. Now, I know that the New Zealand economy is in a world of hurt, and their rates were a lot higher, back during that sort of period of time. But it is something to sort of bear note on. I think what you said there, Anthony, makes a lot of sense. If the incentive is not there to, be it, we've always had this throwaway line that we've used and sort of said, you'd never go into property for the sake of the yield, because on a yield alone basis, it's pretty rubbish, right? Particularly when interest rates are now, at 5% in term deposits. So if you've got the growth, okay, that you can look at that. But if you don't actually believe that there is going to be growth, or in fact that it could go the other way, what does that do to your sentiment? And that concept of feeling wealthy because your property prices have continued to go up, that actually makes a lot of sense. And it's quite factual that when people feel wealthier, they behave differently. If people stop feeling as wealthy as they were, what does that do to their confidence? What does that do to their discretionary spending, etc.? That can have a pretty big ramification across the economy. Yeah.
Yeah. No, look, and I think you surmised it well there, in the sense that one of the things that always plays in the back of my mind is that from a wealth perspective, if your property values are coming down, like a lot of people, I think what the government is trying to do, like to take a step back, I think what the government is trying to do, they're trying to remove property as an asset class. And that's what we treated it. We treated it as an investment. And what they're trying to do is go, well, actually, it's not an investment. What it is, it's a form of shelter. And it's a basic human requirement in terms of having shelter and all that kind of stuff, and giving everybody the ability to live in something like that and have their choice is what they're trying to do. But the problem that you've got is we've built an entire economic system and an ecosystem where one's property was used as the leverage to then go and do other things. So if you remove that leverage, how do people then go and invest and grow and develop and build wealth and so on? And I think what you've got then you've got this great divide between the people who currently have money, they can do that. But the people who don't, how are they going to get there? Because if you remove the stepping stones or the step ladder, to get there, like this is all about scaffolding. If you take that away, there's no way they can do it. So that's the thing. I kind of sit here and I wonder about where this is all going, because I think the government, from a vision perspective, I can understand the logic of it, but the execution of this and how it actually plays out into the economy. And I think, Mirko, your summation there of, people behave differently if they don't feel wealthy. That's a fact. That's a fact. And we know that from that point of view. Now, that probably leads us on to the next part of today's discussion, where I want to talk about One Nation. Now, 1996, Pauline Hanson comes on the scene, gets asked, are you xenophobic? And she said, please explain. The joke has been going over 1,000 times. Not the sharpest button in the shed. We all agree from that point of view. Put it to the side from that end. However, the prominence of One Nation is growing. And we can't kid ourselves. And there was some research over the weekend in the AFR. If you ever want to suffer from insomnia, read the Australian Financial Review on the weekend. It will fix it, I'm telling you. But in doing so, there was some research there saying that One Nation could win as much as 59 seats. It would blow the coalition apart. So the coalition would pretty much die. And they would also take seats from the Labor Party, where the Labor Party would need to form a minority government. Now, the problem with One Nation is the argument has always been around grievance. There's no real policy substance there. Why do you think people are going towards One Nation? What's the buzz there? What's going on?
I actually think that people are so disillusioned with the two existing, mainstream parties, that they're going to the next biggest party. It's probably more so that they're just so fed up with the current leadership, the opposition, that they're going, what's the other viable alternative? Yeah, okay, this party seems to be the next one in the queue by size and popularity. I'll jump on board here. I don't know that everyone agrees with their policies. Is why this massive run.
Yeah, Anthony, what do you think? What do you think of the drivers of this? What do you think's driving this move to one nation? Like Mirko suggested, there was a disillusionment with the two parties. What other factors do you think are at play?
Oh, I think there's a range of things without getting too political about it. I think immigration is definitely an issue for a lot of Australians, and how that's currently managed or not managed. One Nation have pretty strong views on that. Probably similarly aligned to Trump on a lot of his thoughts around that. So I think that's one of the, and I think safety and security. Like, if you think about her background, where she's come from, she's really attracting the common person, if you want to call it that. And you're right that there's not a lot of substance and behind it, but a lot of people can relate to her in terms of probably the more older Australian, or the as opposed to what this country's now become, which is very multicultural. So, but I 100% agree with Mick. Is that it's effectively, the issue is that you got two governments that you got an opposition that really are struggling to exist at the moment, and there's no real governing body that's effectively trying to move the country forward. Like, how long have we waited for this tax reform? Is it right? Probably not. Was it rushed? Probably. So yeah, look, we've probably gone through some of these stages before with Clive Palmer's party. Probably didn't get the push that it was, but it was getting a lot of publicity. We've had the Greens getting a lot of seats. Yeah, is it just someone else that's an alternative? Potentially, but we'll wait and see. At the end of the day, the country will vote.
Yeah, no, that's true. And look, let's quantify this by saying that when you're 2 years out from an election, it's typical to see stuff like this emerge. And it's when people go back into the ballot box that they go, okay, we've had a bit of fun with that. Now let's go back to normal from that perspective. So I think that's what the major parties will be hoping. But I think there's a couple of things here. Cost of living, I think, is a real issue for a lot of Australians. And I think we're not making progress in that space. If anything, bills have continued to rise. Anyone that walks into a supermarket is saying, God, it's bloody expensive. Anyone that's getting their insurance renewals is going, you're kidding, right? And, healthcare costs and all that kind of stuff. And there's no notion there too that middle Australia is feeling left behind. And something that I've banged on for years is talked about, democracy works best when there's an affluent middle class. If that middle class is being squeezed, and that's what's happening at the moment, and the problem is, as it's being squeezed, they're not going to the top end, they're going to the bottom end. So as they're dropping out the other side, they're going, this is, for want of a better phrase, this is shit. What's the alternative? And then you have somebody like, Pauline Hanson or One Nation, who, we agree, it's grievance. There's no substance behind the policies from that point of view. But, the fact is she's speaking and you're kind of going, she makes sense. And I think that's probably the issue that we've got to be mindful of. I think just from an Australian perspective, the challenge for Australia is that America has tried this. There's a blueprint. You just need to look at the United States to go, that is an absolute chaotic show at this moment in time in terms of what's going on over there. And if we're not careful, we're going to replicate that. And this is the problem. And I think sometimes the idea and the attraction of dancing with the devil feels exciting. But I think you got to be really careful, because once you go to bed with that thing doesn't give back. And we're now living that dream at this particular moment in time. And unfortunately, given the power of the United States, we're living it at a geopolitical level and a global level, not just at a US impact level, which then leads me on, Mirko, because Donald Trump, he's the man. We've had a ceasefire. and it was fantastic. And I thought your summation before was brilliant. Don't worry, people, under control. We're on the verge. I've just got to sign it, and now I've gone and blown them up again. Is there any hope that this is going to come to a close anytime soon?
I don't think that it's going to be a quick fix, and I do believe that this is going to be drawn out. However, I do believe always back self-interest, and midterms are coming up in November, and Donald Trump can't afford to have this still stop-start on-off again scenario going on. So I do think as we sort of progress closer and closer to that time, that we will get to some sort of resolution there.
Yeah, and look, we can only hope. The only concern that I would have there, Mirko, is I think the resolution will be we're in a significantly worse position than what we were on February the 28th. I think there will be a thing there where, yes, we might have access to the Strait of Hormuz, and yes, we might have things flowing through, but there'll be toll fees paid to a regime that we didn't want to pay to. And I don't think we're going to resolve their nuclear issue either. So I'm not sure what we achieved outside of just being absolutely stupid, but we'll leave that alone. Gentlemen.
Anyway, Luke, by the way, thanks. The Australian dollar's creeping up to nearly 0.72 against the US. And I thought to myself, maybe on a slim chance somewhere down the track to get to the US, but I think you've just pushed me out another 18 months. Well done.
No, mate, you're not going to the US anytime soon, buddy. You're not going to the US. All right, gentlemen, it has been a cracking week in terms of work, things moving, parts moving from that point of view. I dare say you must be both looking forward to the weekend. It would be remiss of me not to say anything about Essendon. Just when you thought it couldn't get any worse, the entertainment continues. To all my Essendon supporters out there, my heart is with all of you. It has been a tough period, but we will get back eventually, I promise, or I'm certain, hopefully by 2053 with a bit of luck. Anthony, what do you got planned this weekend, mate? Anything exciting?
No, apart from watching Essendon lose again, and lucky they don't have a promotion and relegation system in the AFL, because that'd be a shame. No, not much on. Very quiet weekend.
Mate, you're an average bloke, Anthony. That's all I'm going to say to you, mate. You're an average bloke. What about you, Mick? You're a bit excited. Kangas are in the top 8.
And we got a bye this weekend, so I don't have any stresses whatsoever. By the way, folks, if Luke doesn't appear going forward on the Weekly Rapids because he's taken the Essendon coaching job, he might throw his hat in the ring. It couldn't be any worse.
One quick question. James heard yes or no, Anth?
No way, no. And like, people have got very short memories.
What about you, Mirko?
We'll get the job, but I think it's a mistake.
Okay. I'm all in. This love affair that we've got with James Heard, we've just got to, it's like two high school lovers. I think they were talking about this yesterday on Triple M, and I do agree. We've just got to bring him back together again. If it works, it's going to be the best romance of all time. And if it fails, we can finally put it to bed. And I think for Essendon supporters, that's really important. The other thing there too is Essendon supporters are looking at Carlton at the moment. Got rid of Voss. They've won 2 on the bounce, and they'll beat Geelong tonight too. Just to let you know that. They're going okay, our Blues.
Yeah, right. Side bet is coming.
100%. Can I get in on this lunch? I'm in.
Fair enough too. All right. Well, look, to our wonderful clients out there, I haven't even looked at the weather, but get out there, enjoy the weekend as best as you can. It is starting to get a little bit crisp in the air from that point of view. So we're definitely into red wine season. So I'm thinking a nice Shiraz might just hit the spot for the weekend. From that point of view, to our wonderful team, as always, thank you for all the wonderful work that you do. Gentlemen, thank you for joining me as well. Enjoy the day. Take care, and we'll see you next week. Cheers, guys.
See you guys.
Everyone.